Hey guys, welcome back. Today we're going to be going over 5 mistakes that you must absolutely avoid if you plan on investing in the stock market. If you plan on being an investor in the stock market, you have to make sure that you do not make these mistakes, because if you make these mistakes, you will get frustrated and you may even lose your money. So we're going to get right to it. Now, mistake number 1, you should not be putting money in the stock market that should not be invested. And what do I mean by that? Yes, the stock market is there to allow investors like you and me to invest and multiply our money, to make our money grow. However, you have to also know that investing is risky business. So if you plan on investing in the stock market, you will be subject to risk. And as you remain invested, the value of your investments will go up, they'll go down, they'll go up, they'll go down, which basically means that you may not be able to take the money out whenever you need it without incurring a loss. So if there's money allocated to pay your bills, if you have to pay your rent, if you have to pay your mortgage, whatever bill that you have to pay, you cannot use that money to invest it in the stock market. A month is too short of a time period for you to be able to make that money grow. At which point you would not be investing, you would be trading, and that is entirely different. Now, in addition to money that is allocated to pay bills, you should not be investing your emergency fund. If you have an account that has been dedicated as an emergency fund and it has emergency savings in it, these should remain exactly where they are. You should not be investing your emergency fund because they are there to cover unexpected expenses that you may have in case of an emergency. So if you put that money in the market and your investment has gone down in value and you have an emergency, meaning that you're in need of money to cover this unexpected expense, you will have no choice but to sell your investment at a loss to cover that emergency. That would, in a sense, negate the entire idea of investing. You are investing to grow your money, not to lose money. So if you have money that you cannot part with for at least a few years, you should not be investing it in the stock market. If you do, you will actually achieve the opposite of what was intended, and you will lose your money and you will have no one else to blame but yourself. And mistake number 2 is not having any goals for which you are investing. And what do I mean by that? You should not be investing just for the sake of investing. You should be investing for a particular goal. Is it for retirement? Are you investing to be able to cover your kids' college education? Or are you investing so that you can retire early? You have to have a particular goal in the future so that you can have a strategy and implement it as such. So if you are only investing just to chase returns, just to try to get the highest return that you can possibly get each and every time, you will inevitably be taking way too much risk than you should be. And yes, by investing in the stock market, you are taking risks, but you should not be taking risks unnecessarily. And you've probably heard the saying, high risk, high reward. However, that's not always entirely true. If you are taking unnecessary amount of risks, then taking the highest possible risk that you can take unnecessarily can cause you to lose it all. And that is definitely not what we're trying to achieve here. You're trying to invest to grow your money, not do the opposite and lose money. So you've got to have specific goals so that you can plan accordingly and take a decent amount of risk, however, make money overall. If you make that mistake, you could lose big time. Now, the third biggest stock market mistake is not allowing the time for your money to work for you. And what do I mean by that? To get the best results when investing in the stock market, you have to be investing long term. You have to have a long-term perspective. That way, you will get decent returns as the market generally produces over extended periods of time. And this is why it's crucial to have access to an emergency fund, for example, so that you don't have to raid your account, you don't have to raid your investments, possibly getting the money out at a loss. And especially when it comes to the stock market, investments produce the best results when they are left uninterrupted. Now, I'm definitely not saying that you should be completely hands off and forget about your investments completely. Yes, you should continue to monitor your investments, continue to review your quarterly statements, but you have to allow your investments the proper amount of time for them to do what they are meant to do, which is multiply or grow your money. Now, the fourth biggest stock market mistake is taking bad advice based on what is currently trending online, particularly on social media. Investing is definitely not a game, it's serious business. Taking investment advice from social media without doing your due diligence is grossly irresponsible as an investor. Just remember, you are the one investing your hard-earned money in the stock market. If you make any mistakes, if you invest in assets that you should not be investing in, if you are investing in assets simply based on what some random person says on social media, that person will not be losing any money if things go south. you will. The person or the people from whom you are taking investment advice may not even be investing in whatever stock or whatever index fund or whatever ETF they are talking about online. So if you go ahead and follow them blindly and take that advice at face value, once again, you will be losing money in the end, not them. So always, always, always remember, you have to do your research before you invest in anything. If the potential investment is not something that you are comfortable with, if it's not something that you fully understand, you should not be investing in it. And I can virtually guarantee it. If you do, it's highly likely that you will lose your money. Now, the fifth biggest stock market mistakes that you can make is constantly watching what the market is doing. If you are a long-term investor, you should be looking at things long-term, 10 plus years from today. And the reason why you should not constantly watch what the market is doing is because the market will do what it does. It fluctuates from one moment to the next, from 1 hour to the next, from one day to the next. So constantly watching what the market is doing is not going to make your investments do any better. Whatever your investments are doing, they will continue to do it depending on how the market is doing. By constantly watching the market, you will only get yourself stressed out for nothing. And as I said earlier, if you are investing, you should be investing for the long term. And if that is the case, hourly, daily, or monthly movement in stock prices should be inconsequential to you, particularly in the short term. Now, whether the value of your investment goes up $100 today, $50 the next day, then down $70 the day after that is irrelevant in the short term. You should only really care about what the value of your investments are doing 10 plus years from now. So constantly watching the stock market is not a good idea as a long-term investor. You just need to have a general idea of how the market is doing, a general idea of how the economy is doing, not watching the market so closely that you see any drops in the value of your investment and possibly make an emotional decision based on that. For example, panic selling. You never want to put yourself in a situation where you are panicking so much that you are selling your investment out of fear, therefore potentially selling them at a loss. So stop watching the market so closely and go on about living your life. So these are the 5 biggest stock market mistakes that you should try to avoid at all costs. If you do not avoid them, it is virtually guaranteed that you will get frustrated, you will get stressed out over nothing, and you will possibly even lose your money. So if you didn't get a chance to do so, please comment, like, share, and subscribe. And also, don't forget to hit the bell button so that you can be notified as soon as I release my next video. I'll see you next time. Have a good one.